Friday after a recovery on Thursday. And really, the dollar has been quite tame. We played the dollar from the short side, and I recommended buying dips in the euro at 108, 108.40. We got up towards 110. I did identify this 98.50 level in the dollar index as being important support. And until we take it out, that there still could be some more upside. The big event this week in my mind is Draghi. And I just want to refresh everyone's memory that Draghi disappointed last time. That's when I was talking about a long in the euro around the 105 level, and we rallied to 110 in 36 hours. So I could see this playing out a couple of ways, that the dollar rallies into Draghi, because up until the last ECB meeting, it was a layup. All you had to do was come in short into the ECB meeting and Draghi press conference, and you made money being short euro every time until last time. And besides the ECB, there have been a few other central bank missteps. A lot of people are saying it was a mistake for the Fed to raise rates in December. I don't know if that's a cause for this, but a lot of people are laying this stock market volatility and this crash we've had in the market, something else I've talked about. So my point is the dollar's held up quite well with this sell-off in US dollar denominated assets. To me, it looks kind of late to get short, although I could still make a case for 1800 here on the S&Ps. We have taken out some significant support levels here. We still seem to be holding it on the nearby. We need to take out 1830, 1820. So far, we have a little bit of an inside week working here. So this should have caused much more of a dollar sell-off, and it didn't. So you do kind of have to respect how well the dollar's in with this type of break in energy, this type of break in stocks. This is the worst start in U.S. stock market history, down 10% for the first 2 weeks trading of the new year. They say as January goes, so goes the rest of the year. So very critical support here. I think most likely there's a chance they may go for the stops here, take us down to 1800 before recovery occurs. The yen, I've been talking about a 116 level major support weekly neckline for several months. We actually tested it and held it last week. I think the yen will mount a rally. Perhaps that's what saves the market for now. And actually, I think the market would welcome a weaker dollar, because that could be actually a little bit supportive of the crude market under pressure. So a weaker dollar actually would be welcomed by emerging market economies. When I look at euro, it looks like it's still an incomplete pattern. I think there's at least another run up to 110, 110.50, and still think there's a possibility of a 113 euro down the road. But we'll have confirmation. Dollar index take out 98.50. Then what you have is kind of a continuation of a move like we had from Draghi, and we start rolling over and breaking down this A, B, C, D, E, whatever it turns out to, could take us down towards this 96.5, 96 range. Give me a Y if you're with me on my analysis of the US dollar. Here's your line in the sand. Okay, here's your line in the sand. Could we poke up towards 100 again? In this environment, I'm prepared for everything to happen because we have such volatility and instability in a lot of the financial markets right now. So I do respect how well the dollar has held up. Maybe the dollar break is the next phase of the washout. I still think there's another push up in gold above 1100. Which tells me to be looking for something counter trend in Aussie. And let's take a quick look at the crude oil market. This could end up being a classic sell the rumor fact now that the nuclear agreement and sanctions have been lifted over that, although there's new sanctions coming over their ballistic missile testing. I think to the point of exhaustion, although a lot of people are talking about $25, $20, I think there's at least a bounce back to 34. And then I can't rule out, when I look at the weekly, possibly a move to 38. We have a big falling wedge here on the weekly. Here you go. So here's drive 1, here's drive 2. This is still drive 3 on the weekly. We're under 30, but we're above this reading here. This is 22, and this was 9. So very oversold, but the falling wedge would have a line from here to here, and we need to get back inside 34 to arrest the decline. So I think bounce back to 34 is possible, and with that, maybe the super strong USD CAD comes off a little bit, which it hasn't. I do think that they will turn together for at least corrections, but I actually thought Canada was going to top initially at the 42 level, and here we are over 145. So I cannot abandon. I'm still accumulating crude oil, looking for a turn in this market. We'll see what happens. I think this could be the week. So this could also be the week for scalp on the long side of Aussie. It took all this Canada strength for the Aussie and stock market weakness for the Aussie to break initially the 70 handle, which I was talking about, and now trading at the 68 handle. Also, EG is something I talked about down at the 70 level, and I know I've talked about some counter trend trades in EG, but you could go back. I was talking about a 78 euro pound. We're almost there, but not quite there. So that still favors the euro over the pound. Give me a Y if you're with me, and you recall the right shoulder of a weekly head and shoulders bottom on the euro pound when we were trading. You remember that? Near the 70 level, I said over 74.5, and even last week I said closing over 74.5 should launch the final wave up towards 77, 78. Right, I'm still showing the crude. Thank you, I'll get the instruments. Okay, so the only other thing I want to show is treasuries. There was a pretty big bid, that's why the yen was weak. Right, you had a weak stock market, and you had a strong bond market, so the yen came back to major support. I do think eventually we will break down under that 116 level, but I think it's set up for a pretty good rally, which is in conflict with me looking for a lower dollar, but here we are. Had a huge bond rally, which has been bullish yen, negative US dollar yen. Maybe we get some bond top in the next few days and the yen does not break down. So despite all this weakness, we're still way under the flash crash low yields that we had, and we're almost at those levels. So with that being said, now I'll get to our instruments. Any questions on the outside markets? I correlate USD CAD with the oil, Aussie with the gold. I haven't shown you the gold yet. Let's give you a look at gold. Gold found a bid with the big sell-off on that we had on in the markets last week on Thursday. I think that we could rally back after a little pullback towards 1120 before it failed. So that kind of ties in a little bit more dollar weakness. Another $30 to the upside in gold, up towards 1120, which tells me to be looking for a long side scalp in Aussie. I believe 90% of it's factored in. So I see it as sell the rumor by the fact. Most people believe that this agreement, nuclear agreement, was going to be ratified. They've been talking about it for months on end. I'm not surprised by it. I don't think the market's surprised by it. Today's reaction was maybe we're down a buck at its worst levels, but to me it could end up being a textbook sell the rumor by the fact on the crude oil market with this nuclear accord between the U.S., the rest of the world, and Iran. Does that answer your question? Not saying it can't go to 25, which a lot of people are talking about, but I am starting to get some divergences on some of my intraday stuff on WTI. So here's the gold. With gold looking okay, held support at 1075. As long as we stay above last week's lows, we could get another leg up, which tells me maybe we get a leg down in the dollar, another push up in euro, and a recovery in the Aussie, and looking for the end to hold 116. Any questions on the outside markets and my views? With all of it hinging on that 98.50 level in the Dixie, and my best guess is if they sell the euro off after Draghi speaks, that I would be a willing buyer of that dip, because I think that perhaps whatever he says might be short-lived. May not be as dramatic as last time when the euro rallied 500 pips in a day, but I'm thinking that a lot of the central banks are not seen as omnipotent as they were seen last year. China's central bank people see is panicking with all kinds of measures on with the yuan, trying to support it outside its borders, inside its borders. A lot of people saying the Fed painted itself into the corner when it tightened, and the stock market has been clobbered. And Draghi let it off with the disappointment of his QE last go around last month. And it's very possible that instead of going with central banks and their statements, that you begin to fade them. Give me a why if you understand that concept. Because it was a layup to be short the euro every time there was an ECB meeting and Draghi was going to open his mouth. And that shifted, and not only the ECB's effectiveness shifted, but everyone thought China had everything under control, and everyone thought the Fed had things under control, and nothing is under control. I rest my case with that. Give me a why if you're with me. Okay, let's get to our instruments. I always start off with Euro USD. So last week I was talking about being a buyer, the week before 108, and then last week I said buy a pullback to 850. I was looking for 110.5. In fact, when we look at the 4-hour, I have convergence of a few lines that come in. My ultimate objective is here on the daily. It's the breakdown of the daily up near 113. But we also have a couple of potential 3 drives. Let's call this drive 1. Drive 1. Drive 2. And that's going to come in right around 110.50. So I think you could be long with stops under this 830 level, and for sure we get under 108. You're probably looking for 106. But I'm thinking there's another swing to the upside, maybe up towards 110.5. And if we get to those levels before the ECB, I would book it. I wouldn't necessarily reverse, but that's a trade I see from today in the euro, that we have the potential to get back up to this 3rd drive line. We have a lot of potential 3rd drives coming in. Here's another one. These intersect way out there at about 12.5. And then here's the daily breakdown, a retest of the breakdown of this uptrend. So a lot of these coming in, converging up above 113. I think we could get there, but we'll take it a step at a time. And first target's going to be off this 3-drive line right here, right around 1040. Give me a Y if you're with me. And then if we get there prior to Draghi and the ECB, you're out, you're flat, you wait for the ECB. If Draghi talks the euro down, my best guess it's going to be a buying opportunity if he talks it down. So Wednesday, I'll be back here before Draghi, and we'll take a look at what levels have been achieved and what the setup is going into the day before. Maybe I'll have an idea where we could buy a pullback if Draghi attempts to talk the euro down again on Thursday. Give me a Y if you're with me. And remember that 98, yeah, I think you could buy it at this level now because your stop is pretty tight. You want to get out of the way under 108. So you're looking for 150, risking 80. Yeah. Okay. Or if you're a bear, you wait for 110.80 to sell. I still think they need to take the stops out here. See how we didn't take out these highs? I still think there are some stop hunts possible here. I think they want the stops here. I think they want the stops here, this last 3rd drive that we were there for. And we sold it up here. So I talk both sides of the market. You know, you can even see a little bit of an internal head and shoulders here with 107 being the head. Here's a left shoulder. Here's a right shoulder developing, you know, which would allow for it to come back down and clean out 108. But I think we should just hold and go from here, heading up towards these levels. And then if you just take a measured move, you're talking 113, right? Because basically you have 107 to 110 breaking out over this resistance line would give you 113. That's my view in the euro. Any questions on the euro? And what continues to give me conviction is, but down here, I was talking about, remember Amit, about a right shoulder, and we would not take out the lows in euro pound. Said that this was going to be a right shoulder. We'd rally to the neckline, which we did up here at 74.15. Broke out above this neckline, and it measures up towards 78. Maybe even the 200 moving, 78, 79. So I don't think the euro pound's done. And you've made money selling rallies in the pound and buying dips in the euro, correct? So by having this correctly diagnosed, it kept you on the long side of euro on weakness and made your preferred short the pound. Because when euro pound's going up, your preferred long's the euro, your preferred short's the pound. And when euro pound is going down, your preferred short, when you think the dollar's going up, is the euro. And your preferred counter trend, when you think the dollar might come off a bit, is the pound, which is showing relative strength to the euro. Okay, so we're not quite at these objectives. So this is another reason that I think the euro could trade up to the levels I talked about before. And down here, everyone thought I was crazy that it would be a right shoulder. But it looks like we are, and euro pound does nothing wrong until it negates the neckline back under 74.5. So I talked about buying it again over 74.5, and that's not bad, 160 pips on that from getting long once we closed above the 74.5 level, which happened right here. I drew this straight line. So I say it closes over 74.25, go with it. You never took any heat. We're beginning to diverge a little bit, but I don't think we're quite there yet. which supports another pop in the euro. Hopefully it happens before Draghi opens his mouth. Hello, Frank. How are you? Any questions? You could feel free to pose them to me or ask me to clarify. Okay, nice to meet you. So let's move over to the yen. So I talked about this being a right shoulder in the yen, and it was correctly diagnosed. I was looking for shorts at 24. The high was 375. And we had this big break in equities. And here we are sitting on the weekly neckline. So up here, just like the euro pound, it was a forecast. But here we are. Now it's reality. So the big question for equity bears, equity bulls, risk on, risk off is, are we going to break down here in US dollar yen? Because every other time we've been here, we've generated a decent rally. This was a flash crash low in August. I said we would retest, eventually take out the flash crash low. But we've had nice bounces. Here's one bounce. Here's another bounce. Here's another bounce. So I am expecting a bounce here. And closes back under 116.40. That's a different story. But I am expecting a bounce in the end. And I'd like to see at least 120.5 for a short. And this might be a decent counter trend trade in the end. We're beginning to diverge on the 4-hour. This was a confirmed low. Here we diverged. Here we diverged. And if they take it down again, this time we're either going to hold a fib retrace before we rally again, or we could get a third drive. Here's one, here's two, and test 1635. I favor more of a retrace of this bounce here, maybe around 1680. And then if we get over this 1820, that's 170, 180 pips from here. That would give us a 120 potential sell zone up here. So I'd be looking to buy breaks in the end. And I'm a better seller up between 119.80 and 120.5, 121. That's where I'm interested in selling the yen again. So with the yen looking supportive, some of the crosses should begin to correct. The one that got punished the most, the one that I was most bearish, was the guppy. And we talked about the guppy all the way up here. At the 88 and the 85 level, I had 80 targets, and I had 74 and then 71 targets. Okay. So we already got down to 65. I said eventually I think we could get to 150, but I'm going to be looking for the potential of maybe some type of counter trend bounce here in the guppy. We're beginning to diverge, but at the minimum, don't be short. Euro yen acting better, not making new lows. I think we could have, this could be A, and this could be B, and if I'm right about it, one more push up in the euro, that we could rally back towards 129-ish, correct this big decline that we had. I missed the euro yen, but I was right for the guppy. The Aussie yen is also starting to show some potential bottoming action here. Here's one. Two. So I'd be alert for a divergence down around 79.15, about another 140 lower. I'd be looking for that for a possible retrace. It's been one hell of a move, right? I pointed out this 89.20 level was a test of a major breakdown. We did it. And now here we are with a potential second drive. Here's one, here's two. So I'd be looking for something counter trend to develop in Aussie yen over the coming days. Looking for one more low. Give me a Y if you're with me. So a similar setup in Aussie, okay. I was bearish up here, talking about that we would take out the big round number and talked about a buy at 69.20. It worked for a little bit, but then when stocks fell apart, so did the Aussie. So Aussie has finally made new lows. We're diverging pretty dramatically here in the Aussie. I can't get bearish Aussie just like I can't get bullish Canada here. So we're beginning to diverge. I'd start paying attention around 68.05 for a possible counter trend bounce, especially if I'm right about the dollar coming under 98.5 and the gold having one more bounce up towards 11.20. I think you'll get a pop in the Aussie. And I wanted to show you the Aussie Kiwi chart because that's also long-term very interesting. Long-term. So I'm not saying the bottom has been reached. We have a confirmed low, but start to put this on your radar screen. And it's basically based upon the weekly chart, where we have this big initial rally, something that we talked about a while ago. And we've had a nice retrace here. And look at this. This could be a left shoulder. We could be developing a right shoulder here. Maybe we have to retest this 104 level again. But I don't believe we're going to make new lows. I think you're putting in a right shoulder. And then you have something like a neckline here. Let's just put it right here. And that's going to be a big move. You know, that could take it up to 126. So looking for reasons in the next week or so to be long Aussie Kiwi instead of looking for new lows. So Aussie's made new lows, but Aussie Kiwi has not. So I think there's a potential trade setting up there. Give me a Y if you're with me. Canada has been my bane. Had all kinds of divergences, and they would work for, 60 pips. Had this divergence, they work, but then we grind to new highs. We take out wedge lines. We're diverging again on today's gap higher opening. I have to think, if I'm right about crude, that there's an eventual top and a break to 40 eventually. This has gone further than I thought. I thought we were going to top around the 142 level. We're right here. This has been a runaway train, just like crude has been to the downside. But I certainly can't be long Canada up here at 145. It's very high risk. I think we're going to have a nice shakeout that eventually could take us back down to 140, and you can't even rule out 138, but it's a very high risk trade. Any questions on that? Euro Aussie looks to possibly, with the Aussie, have another shot to new highs here. Perhaps we're going to challenge these highs, so I wouldn't be short the Euro crosses at all. Euro Yen, Euro CAD. Look for a bounce in some of the crosses. And your really key level to pay attention to in the dollar index is that 98.5 level. And then pay attention to the euro. And if we achieve some of these objectives in the euro, right around here, after we take out some stops, take out these stops, which are 110.59. You may want to go to the door, especially if it's before the ECB and the euro's weakening into the ECB. Any questions on anything I've covered today? I hope you're able to ride that euro pound and took at least the center of the pie, the center of the melon out of that one. Any questions on anything I haven't covered? Okay, so good luck. I'll be back Wednesday and we'll tighten up some levels going into the ECB. Thank you, guys. See you Wednesday. You're very welcome. Thanks for your attention. Hope I gave you some things to consider.